So we have, if you're into precious metals, you want to stick around to hear Bob Coleman. Bob, welcome back to Face. How are you?
Good deal. How you doing?
Good, buddy. Good to see you. I catch a lot of your posts. Anything going on supply wise that, you were way on top of before we had this squeeze and huge move in metals about lease rates going up and not having the correct type of silver for deliveries. Has that changed or has it been exacerbated in the last few months?
Yeah, there's too much metal, I think, on the exchange at this point. And it's something I've been picking up on. I mean, you still have the industry is still seeing quite a bit of slowdown. Just I'm talking about retail and wholesale coins and bars. 2 weeks ago, it was really, really bad. The bids were pretty much discounts on everything from the wholesale level. So,
Okay.
which Gold Eagles, almost 1% under spot. I mean, it was stuff that you see when you see a wave of selling coming in, and it just seems like
That's really
that.
strange,
Yeah, this
isn't it?
is not the Bitcoin laser eye diamond hands rally. This is let's get rid of this stuff. It's hot trash and pass it around as fast as you can, the hot potato scenario. It is really wild. I mean, I've never seen a bull market go up as much as this has, and you've just had so much disdain to it. And then, of course, platinum, going absolutely
That,
nowhere for 15, 20 years, and all of a sudden it breaks out. And
yeah, that was a great call. You made that. Uh, some of the people that bought it, I think you were talking about the volatility of the metal, that if it was too much for people, that there's an alternative. What was that tweet about? Do you know what I'm
yeah,
talking about?
yeah, basically, it was for, the conservative side of investing in metals is just simply buying the metal. So therefore, you don't have, market risk. Well, I shouldn't say market risk, but systemic risk, counterparty risk,
Hmm.
management risk if you're going into mining stocks, and all these other types of things that can affect your typical securities investment, whereas the metals are just simply, hey, if the price is going up, the metal should rise as well. um, it's kind of a no-brainer. Some people like to use ETFs, which is fine because the cost to get in and out of these things are much
Cheap.
lower than buying the physical. But the other side to a platinum ETF is it's a very small market, and when the volatility comes in, those funds can go to pretty wide discounts and premiums to NAV on top of the
Okay.
very high management fee.
Okay. Uh, Interesting. Yeah. Let me ask you this: but dealers that carry a lot of inventory, do interest rates matter to them? Are they
Oh yeah.
financing? Do you finance your inventory?
No, no, we
Okay.
I don't. I don't.
Okay.
It's one of the things that earlier this year when finance or even last year financing costs went up,
Yeah.
and and a lot of dealers obviously were getting pinched with this higher financing costs, and of course the tariff thing issue, EFP blew out and you had lease rates go up and so forth. That also impacted a lot of the monthly costs of dealers. Um, it's I would
That
say that rates pulling back a little bit has helped a little bit, but the problem is dealers are heavy inventory, light cash at the moment. So
okay.
that they're kind of forced, and the way the industry works is most people work off lines of credit. The lines of credit force them to hedge, so they're going to have
Yeah.
to have to increase those carrying costs just due to the volatility of the price action.
Okay. It's a tough business, almost like being a farmer.
Yeah,
Yeah, you have to
similar.
hedge your
Yeah,
crop. Only you don't have bad weather won't hurt your product.
yeah. The
That's
the
your
tough
advantage.
Yeah, yeah. The tough thing about the retail precious metals industry from a consumer standpoint is the massive costs of getting into the way they were charging,
Yeah.
and just the way the industry operates, getting into product, and now the last year and a half, what has saved the retail dealer environment is the massive discounts to the spot price when people want to sell back. That's the unfortunate thing. People are seeing, almost 10% uh, uh, uh,
Yeah.
discounts to spot why they want to sell back. Like for example, most silver products. It's unfortunate because we look at the precious metals as potentially as an investment class, but it's not treated like that. It's there's a lot of uh, there's no best interest, best efforts basis to provide some type of fiduciary support to the customer. It's all every man for himself type of thing.
Okay, so like silver, let's say silver's trading at 36 right now, and I'm a seller, and I know that different products bring different spreads, but on average, if I'm a seller of silver at 36, what's going to be the bid?
If you go to most of the big online retailers, it'll probably be like, say for example, a 100-ounce silver bar. It'll be $2.50 under spot.
Okay, so you would get 33 and a half on it. Yeah, that's pretty
Yeah.
big.
Yeah, and not to mention if you bought it between 2020 and 23 when silver was say $22, $25 an ounce, you probably paid $4 to $5 over spot for that same bar.
Wow. Okay. All right. Well, that didn't happen to me because I bought I don't know, my some half of my position from you.
Sure.
So that's something for people to take into consideration. Really, shop dealers check Bob out, and you don't even have to take delivery because you could rent it an apartment in Idaho and let your metals live there. Um, so you want to talk about the security of people holding things in your vault,
Yeah, I mean
company's vault?
yeah, I mean and it just doesn't have to be me, but anyone that's looking to store metals versus, for example, investing in ETFs or in structured products, especially with more of this volatility and so forth. You see every price tick higher, you're seeing people selling into the market, and most of these depositories, if not all of them, are owned by a gold dealer, financial institution, or cash in transit company. So they're transaction oriented based in terms of their revenue model. So when you start to see things impact the market and impact transactional revenue, it impacts the depository side of most of these companies is more of a side business. It's really
Okay.
supported by the parent company. So those are certain things to watch for when you're looking to have your stuff professionally stored or getting into a structured product, like some of these popular, digital based, they call them decentralized, but they're really centralized programs or securities. Just be careful, read the agreements. They're going to tell you everything. And you're seeing more and more of these. I don't know if we talked about last time, but these waiver of jury trial clauses and other types of limits of liability clauses that are really starting to pop in to a lot of these contracts, even on the amendment and addendum side, where they just post them to the website as a change in the contract.
So it'd be arbitration only
Yeah,
instead of being able
arbitration
to go.
only. Yeah, and some
Yeah.
of these instances may even limit the liability to a certain dollar amount. So I've seen it where you can't go more than $10,000. Even if you invested 1 million, your maximum limit of liability or their limit of liability is 10,000. So it's a tough thing because we just saw and I posted this a couple weeks or last week I think it was Robert Higgins, who owned First State Depository. Was found guilty on all charges in terms of, I believe it was fraud or theft, where about 76 million, I think, or CFTC, I think, claimed 115 million of metals stolen out of the vault over the course of 10 years or so. Well, he was found guilty on all charges, just sentenced last week to 65 years in prison. I think he's 69 years
Wow.
old,
That's
$76
it.
million restitution. Um, that was a depository that stored on a segregated basis. But the problem is he was also a dealer, and the unfortunate thing, it's one of the reasons why I keep it very simple on our depository. It's not owned by or associated with a gold dealer, even though I'm a registered investment advisor and I buy and sell metals underneath that company. I'm not a dealer, so I don't want to take the conflict of interest and potentially overlay that with the depository, and that's unfortunate because a lot of people are learning either the hard way or they're learning, wow, I paid higher cost to get into this product, and now all of a sudden, as things are slowing down, what other risks am I looking into? Because the last thing you want to do is move your metals around. The cost of logistics has only gone higher, so these are things to watch out for when you're wanting to invest in precious metals for the long term.
All right. You have any, I know it's not your wheelhouse, but you have levels that are important to you in both silver and gold and you know, any kind of bias. You've been in the business for a long time. Do you think we're gonna have this typical summer slowdown in appreciation of both gold and silver?
I would say seasonally, normally that would happen, but I don't know if we're going to get a seasonal summer slowdown with President Trump.
Yeah. And
That
I hear the ceasefire has already been broken. That
you got the big beautiful bill. I mean, yeah,
yeah,
you got tariffs now back in the headlines. I mean,
yeah,
they're on, they're off. It's yeah, this is I think
D
this adds to the complexity and a lot of the frustration out there. People don't want to buy the metals, on I should say the US retail side. Maybe the idea is that, hey, I don't want to chase this stuff, it's too volatile, it could really come down hard if the market pulls back, but then this thing just keeps grinding higher. And
yeah,
the story now is really about the dollar, I think, more so
right.
than the light activity that we're seeing in the coin and bar market. And you also see this with the open interest and the volumes on the COMEX. I mean, you're seeing very, very light interest or light volume activity. You're not seeing these
Mania.
EFPs. Yeah, they've totally normalized. So things have just gotten just really, really quiet.
Okay. So I was going to ask you about tariffs. Um, any impact on the precious metal industry? Could it?
No, it turned out to be a big dud. And it's odd that you mention it because over $500 million, was it $500 million dollars were made by the banks in the first quarter of the year, by playing this widened EFP, where they took advantage of the arbitrage between the futures price and the spot price, where it really blew out. It turned out that the banks basically were pouring metal onto the exchange, selling against the metal on the futures contract, and grabbing that massive premium. So it feels like, the sense is that, these tariffs were really just a lot of talk at the time, and maybe designed to bring the GDP numbers down because this influx of gold doesn't really count toward economic activity. But it does set up, this idea of a potential artificial slowdown, the way GDP numbers are calculated, so you could try to get interest rates lower. I mean, there's a lot of management and sort of I don't want to say manipulation, but management of the markets, by, obviously this administration, to try and get the things they want passed. But that's no different from any other administration.
Yeah. So gold silver ratio, I thought it had peaked and it's come down pretty hard. But look where it's holding. So I know some guys that say there's going to be another shot up here for one more high, which will favor gold over silver. What would you do with 100 in cash? Would you go 50-50 gold silver now? How would you
Uh,
break it down?
Well, I mean, the hedge fund that I manage, it's still very heavily weighted to silver. So it's,
Okay.
probably 70% silver, 28% gold and 2% platinum. I started to take that platinum position. The odd thing about platinum, which you don't really understand until you actually start trying to get into that market, is it is very, very small. Just buying a few $1 million of metal of platinum basically at the time back in March and early April wiped out
Yeah.
pretty much everybody, any larger bar size type products out there. It was just that's the nature of that market. It's 20 times rarer than gold is. So it's just it's tiny. So but yeah, obviously when money comes into the sector, it can really move, and that's obviously what we're seeing with platinum right now is just money flowing, not just maybe in the United States, but more so over in Asia. This idea that, hey, listen, I'm not going to buy this 10 karat hollowed out gold necklace. I'm going to buy platinum. It's a
Yeah.
third of the price.
Yeah, it used to be at a premium to gold. Palladium catching a bid. Any people calling you about that at all, or that's a little too esoteric for most people?
It is. That's even a smaller market, wider
Yeah,
spreads.
right.
Yeah, it's a much, yeah, that market, yeah, rhodium. Those are just very difficult markets. You don't see a lot of activity, and there's not a lot of product out there either. So it's just there. Palladium is really an industrial metal. Platinum industrial and does have that jewelry component.
Okay. Any inquiries about some kryptonite?
Um, well, yeah, not, yeah. Are you looking, I guess, at the Bitcoin Treasury reserves and everyone just
Okay.
going all in, or
Yeah, yeah. No, kryptonite was, Superman, the only thing
yeah.
that could take Superman down. So I know the new movie's coming out. I was thought maybe some.
Oh, okay.
Or who knows? I mean, because I don't even think kryptonite would affect our current president. So, why don't we talk about what levels you think silver can achieve in the next couple of years? Are you in like the $70 camp that we could double again from here in the next couple of years?
Yeah, I think that's entirely feasible. And the these metals, the smaller markets, they tend to be, they languish for a long period of time and then they just go up like a hockey stick. And the hockey stick side of the move it goes up when everybody least trusts it, and that's
Yeah,
because they've been worn out over a period of time. And platinum is an absolute uh, example of that, where 15 years going into this sort of wedge, I guess, and it just grinding people into the ground, and then finally one day it just happens to take off. And you know, so you get this massive blowout of this wedge, and the first thing people want to do is sell into it. There's like, this is the worst thing in the world. I'm glad I finally got out. I've sat in
yeah,
this thing forever while everything else has gone up around me. And that's actually that's the same sort of uh, influence and same market sentiment we saw basically back in the end of 2023 with retail investors in precious in the silver market, where they were just absolutely disgusted. They overpaid for premiums, from 2020 to 2023. They were promised that the metals were going to go to $500 an ounce, and they never did. And so by that grind down, they just were like, this is enough. I'm just going to sit on it
yeah.
at this point. I'm not buying anymore. I'm done with it. And that's when, of course, things start to move. And that's the setup that we see here. It hasn't changed. I mean, we look at this big beautiful bill. I mean, these deficits and so forth. They
Yeah,
continue just to give away money.
yeah.
This is the name of the game. It's inflate or die, and that's why we all bought metals in the first place, was to try to protect ourselves and our purchasing power.
So, how's your fund doing with the bull market in metals? And is it a public fund, not like a public hedge fund, but can people that you talk to and you meet in the your tweets and interviews you do invest in it?
Yeah, it's a Reg D Section 506 C fund, so it's It is for accredited investors.
Okay,
Minimum investment's 100,000.
okay,
I don't use any type of hedging at all. So it's purely long. So the fund's obviously having a great year with regard to the price action. I've been in March. I started to buy March and
I
early April. I
remember.
started to weigh heavier into the white metals than into
Right.
gold. And so
Yeah,
that's
great move.
yeah, yeah. So that's the difference between sort of a passive style where people like to buy a certain percentage of metals and just hold that percentage, and then look at maybe the price action for an exit strategy. What I try to do is I don't overtrade. In fact, I very rarely trade the fund unless we get to extremes on certain things, and then you try to make some positioning moves to take advantage of those extremes. But it is yeah, credit investors can come into the fund.
Okay. All right. So if you're rich, I saw Bob talk to him when he was going heavier into silver. So he's got a real good feel for the market. And this fund is buying physicals, right?
Yeah, it's designed to have metal in small deliverable form. So gold side, the largest bar is a kilo bar, the smallest is a gram bar, and these are all good delivery bars. Silver, yeah, it has junk coin all the way up to 1,000 ounce silver bars, but most of it's 100-ounce silver bars. Yeah, the platinum, I tend to try and buy 10-ounce bars or greater up to kilo bar size. But the idea behind it is if client wanted cash or distribution, they could take it in cash or in metals. I already have it in that small deliverable form, which is unlike any other fund in the world. And so most other funds will just hold large bars. You want the metal, you're going to have to either take those large bars, or maybe some funds can break it down and rebuy or remelt that into smaller product. But the problem is when you want to remelt these products, that's when everyone else is wanting to do it at the same time. So you have a degree of risk there of trying to get that smaller product size. That's the advantage that I have is I looked at all these things back in 2006, 7, and 8 with the idea of buying uh, fully deliverable products in good delivery form right off the get go. So that way I can sell into this. If retail is buying and premiums are high, I could take advantage of that as well. So
All right, Bob. Well, uh, I've learned a lot about that side of the business from you, and talking to you, and I think that people, uh, you know, should own some. And if you don't feel comfortable, having it, possessing it where it could get stolen, this is a great option. And also, Bob has a pretty good feel for the market. Uh, so follow him at the minimum at Bob at Profits Plus ID for Idaho. Um, Best way for people to reach you, Bob, would X be the way?
yeah, X, they could direct message me. Just go to our website. There's our phone number that's on the website, or we have like an info at goldsilvervault.com, and also a contact uh, page where you can type in and ask questions, and we'll reply back. But we also get involved with also transport. We do a fully insured transportation, whether it's through couriers or our own armored vehicles, or freight. So people wanting to move out of certain jurisdictions, or move from a program, or move from the COMEX, or anywhere, we can help with that and organize that transport.
Okay, you have a fan here, Parth Magithia. So, you have fans wherever you go. I suggest you get some photos taken, 8 by 10 glossies, and autograph 'em and send
Sure,
them out to your
we'll get
clients.
into the merch business.
Bob, always great talking to you. We'll talk again in the fall. I hope you have a great summer, and that the industry, you know, that you thrive through this
Sure.
process that we're going through uh, now that we're in the end game of whatever is happening. The dollar, I think, is going to bounce. So we'll see if the metals can fight off a strong dollar. They have before, and no one's talking strong dollar right now. just like no one was talking hitting Iran and a spike in crude 4
Right.
months
Oh God,
ago.
you nailed that. Oh my God,
So
that was a call.
yeah, so anyway, a broken clock is right twice a day, so I better end the interview before, the little hand advances. Thank you, Bob. Really have a
Sounds good.
great summer. Have a great summer, and uh, I'll send you a DM, and we'll set something up for September.
Sounds good. Thank you, Dell.
All right, Bob Coleman, everyone. Follow him or go to his website at goldsilvervault.com. And that's going to be a wrap. We'll end the week tomorrow with the big number, NFP. Looks like the dollar has recovered and cable's really getting slaughtered. Okay, so I could say it again. I said it at the beginning of the show. I'll say it again now. I know it looks feeble, but I think everyone's could be chanting King Dollar, King Dollar. We'll see. Adios, everyone. Don't just count your currencies and coins, count your blessings. Great having you on, Bob. Post your handle.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.